At present, there are a significant number of macroeconomic and geopolitical movements that are creating an environment for investors to be understandably defensive or risk off. Throughout the past 2 years, economic indicators have signaled there were issues. Coming off the back of the pandemic, fuel has been added to the infernos of already embattled economies by way of supply chain constraints. The issue with supply have had a flow on to nearly every sector and industry globally, creating supply chain-led inflationary concerns. Many nations, particularly in the Northern Hemisphere, are grappling with an energy crisis that is showing, in my opinion, some stark and frightening similarities to those of the top 5 energy crises of the past. Households and businesses should brace for higher power prices over the next few years after the Australian Energy Regulator approved price increases of up to 18% in New South Wales and 12.5% in Queensland from July 1. BRICS, the economic conglomerate consisting of Brazil, Russia, India, China, and South Africa, and the looming perspective of a currency underpinned by gold, is leading to a potential threat to the US dollar no longer being the dominant global currency. Russia is poised and at the ready to develop a new global reserve currency alongside China and the other BRICS nations. In accordance with the BNP Paribas ESG Global Survey, a substantial number of institutional investors are gearing their portfolio allocations towards ESG-aligned businesses. The directional shift comes in line with the intergenerational wealth transfer and their heightened awareness and appetite for ethical investment from millennials and the general population. The economic commentators around the world are now in chorus singing songs about the very real threat of recession. America is looking down the barrel of a not if, but when scenario in relation to the potential for economic recession. Former Treasury Secretary Larry Summers said a recession could be looming as a self-fulfilling process, with all these factors contributing to a significant level of confounding information for making clear investment choices, compounded by the fact that we are coming off the longest bull markets in history, which lasted from 2009 to 2020 and resulted in stock growth of more than 400%. Now more than ever, making sound investment choices requires making calculated and informed decisions. Day trading in this climate for the retail traders brave enough to be doing so is akin to catching a falling knife and requires more than a sentiment-driven or anecdotal approach. Investors are increasingly, and rightly so, seeking out institutions like Barclay Pearce Capital for support when making investment choices. To learn more, please click the link in the description below.